Shopify recently made an announcement about a strategic shift that I think is very important, can really maybe possibly power them to new heights, both as a company and stock price. Now, what gets me kind of excited about what they announced was a very similar situation for Apple back in 1997. Now, Apple had a similar kind of strategic shift that I believe really laid the foundation for a lot of the growth that came after that. I mean, Apple was really kind of teetering on the brink back in 1997, and this kind of shift is what helped to stabilize their business and provide that platform for growth. So if you enjoyed this video, please like, subscribe, share with friends. Now, it's easy when you think of kind of these battles between growing companies and very established companies to think that the established companies have all of the strength, all of the resources, and it's just so easy for them to kind of squash out these young upstarts and maintain control of their market. Back in 1997, that battle was between Apple and Microsoft. However, if you look back in time, if you look at the original Dow Jones Industrial Average, which began pre-1900, there are no original members of that index that are still in the index today. Now, I know that was a long time ago, 100 plus years. However, if you look even just more recently at the Forbes 500 back in 1955, only 52 of those 500 stocks, about 10%, are still on the Forbes 500 today. So that means about 90% kind of washed away. So whereas it seems like this large incumbent company has so many positives going for it, there are a lot of drawbacks as well that come with size. So when you're slower to move, you're tied more to kind of legacy businesses and legacy decision making and strategies. And when there are kind of these disruptive shifts, these young upstarts can just kind of outmove you to the new opportunities and eventually put you out of business. So, back in 1997, it seemed kind of pretty clear at the time that Microsoft was going to be the champion and Apple was going to be washed away. And you can see now all these years later, that's not how it worked out. And Microsoft's not gone, but Apple has really elevated itself. But in 1997, that wasn't very clear that was going to happen. In fact, it looked pretty much like Apple would maybe even go under. In late 96, early 97, Steve Jobs came back to the company. He had departed earlier. And he came back as an interim CEO. And the first decision he made, the first major move, was to go and make peace with Microsoft. So imagine, these guys didn't have a friendly relationship. This was really combative. They're both very competitive people. And their companies were really battling for what, as you can see now, has turned into, incredible market opportunities. So Steve Jobs went over to Bill Gates and he said, look, I would like you to invest $150 million into Apple. As a result of doing that, we'll finally allow and make compatible Microsoft Office on the Mac environment. We'll drop all of our litigation. And you know what? This is going to help Microsoft if they have any kind of issue with antitrust, this monopolistic kind of litigation that was starting to kind of become a worry for Microsoft. This will look like, hey, look, you're helping out a fellow competitor. You're promoting the entire ecosystem. You're not trying to monopolize it for yourself. So what Steve Jobs went to Microsoft with was really a win-win scenario. I mean, you win, you get an investment in Apple, and this investment will probably appreciate as we no longer have the weight of Microsoft trying to rub us out. Your Microsoft Office becomes ubiquitous across all PCs, not just the desktop, the PC desktop, also the Macintosh environment, and you can kind of wash away those worries of antitrust. Now, Apple, as a result, won in many different ways. So first off, a lot of developers for softwares and investors kind of would look at it as a all or nothing deal up until that point. It's either Microsoft's going to win or Apple's going to win. Clearly, it wasn't going to be Apple. It was going to be Microsoft. Microsoft was much bigger. But once this deal kind of came together and everyone said, oh, it looks like there's going to be space for both of them, suddenly that kind of removed this vicious cycle for Apple that was happening where, the more kind of developers and investors walk away from Apple out of fear of Microsoft, the harder it is to attract new ones, and it's kind of a slow deteriorating situation. Now, you have to also look at this not only from the financial perspective of Apple, where this helped their business, it gave them a cash infusion. You have to look at this from the perspective of institutional investors. Now, if you're going to invest a significant amount of money in a company, you want to see a long runway. You want to see the potential for substantial growth. You don't want to feel like there's this giant that's about to squash you and get rid of you, which was Microsoft at the time. So this deal not only helped to kind of bring new cash to Apple, it also made Apple a lot more attractive to institutional investors by the fact that they were now going to work cooperatively with Microsoft rather than a combative way. So taking a look at that real win-win situation between kind of a smaller company trying to grow and take their part of the market, and a very large and established company, Microsoft, that dominated everything, this really helped them both win, grow together. And that foundation at Apple that Jobs put together removed all of the risk, removed a lot of the worry, provided them with cash. That gave them the foundation to become the Apple that we know of today. Because prior to that, they were running low on cash, they were losing market share, and things just were not going in the right direction. So now, fast forward to 2023. Let's take a look now at Shopify and Amazon. These have been kind of the two people battling out in e-commerce here in the Western world. Now, I know Amazon has a far more recognized brand because Amazon is the platform, it's the delivery, they're the whole integrated process. Shopify really empowers other companies to sell through its network. But if you take a look at gross merchandise value, you can see that Amazon moved about $368 billion in 2022. But Shopify, the company you don't really see anywhere on the vans delivering goods everywhere, they moved 197 billion. So 197 billion versus that 368 billion. And Shopify is actually growing at a faster rate than Amazon for that metric. So I mean, Shopify has become a significant player, even if we don't see them as directly as we do Amazon, as we shop on the Amazon website and etc. Now, this opened up a real battle between these two companies for both distribution and payments. Now, obviously Amazon, I think it's fairly easy to say, has the best distribution network. I mean, it's buy now with Amazon, buy with Prime, and things are delivered to you within hours in some places or a day in others for free. It's an incredible feat, if you ask me. But when Shopify kind of looked at Amazon's growth strategy with all the distribution networks, says, okay, we need to kind of go head to head also in distribution. So they made some purchases and they tried to set up their own distribution network to provide similar services to all of the merchants on their platform. Now, this really set up this very similar dynamic as we saw with Apple and Microsoft, where these two kind of giants, one much larger than the other, were battling over these same opportunities, the same segment. And it was kind of clear who was going to win between the two of them. So now, one of the concerns for Shopify was, if we let Amazon provide all the distribution and fulfillment for our members, because Amazon has now begun the buy with Prime, which allows even people on other websites outside from Amazon to buy through the Amazon distribution network. If Shopify was going to offer something similar for its ecosystem, not only were they going to lose the distribution, but they had the risk of losing the payments, the payment journey. Now, that's an important piece of the puzzle, because that payment journey that Shopify currently controls provides them with an incredible amount of data. It provides them with revenue, it helps them with margins, and it also helps them with business-to-business opportunities where they can extend loans and other services to all of the merchants on their platform. Basically, the payments part of their business is really critical. However, they had a similar situation where, even going to investors, I mean, any investor who looks at this situation will say, well, we have Amazon, which is by far bigger, I mean, many, many multiples of Shopify, with a bigger reach, with bigger economies of scale. If this is going to be a head-to-head battle, this probably won't work out very well for Shopify. And you can, if you take a look at the Shopify stock price, it's pretty obvious, how this has impacted Shopify to the downside. Now, Shopify came up with what I believe is a win-win strategy, very similar to Apple and Microsoft. So they recently announced, Shopify, that they're going to allow buy with Prime for their merchants in the Shopify ecosystem, so within the kind of the Shopify store. This allows merchants to kind of sell their goods under their own brand, but still get that fulfillment through Amazon. So if someone's buying t-shirts off another type of website, well, hey, look, I can still get buy with Prime, get this fulfilled within one day. The merchant's happy, they get to keep all the branding, they get to keep the investor journey, and the customer is happy because they get this very fast distribution and fulfillment through Amazon. So where does this leave Shopify? Well, Shopify for the longest time held out because they said, we can't give the whole journey over to Amazon, or else it's eating too much into our business. So the deal they were able to strike with Amazon, which I thought was excellent, was we'll allow the buy with Prime on all of our websites for all of our merchants, but we're going to handle the processing and the payments. So Amazon is happy they get the distribution. Shopify is happy because they get payments and all the processing. They keep the data, they keep their relationship with the merchants and the vendors. And the vendors are happy and the customers are happy. everybody wins. In addition, Shopify doesn't have to worry about the very costly capital expenditures associated with rolling out an entire nation, international distribution network that can allow for one-day delivery. I mean, it's incredibly logistically challenging to pull that off. So they can focus on their core business and grow, and now actually work as a partner with Amazon to continue growing their business. So as you can see, there's a lot of similarities. I mean, there was the same kind of head-to-head battle as Apple and Microsoft had between Shopify and Amazon. And I think in both situations, we were able to kind of get a win-win situation, a win-win outcome. Now, if you take a look at the chart of Apple in 1997, if you look at where the deal was announced, you can see this instant kind of gap higher on Apple as a result of that deal. Investors saw that it was going to be very helpful. It was going to be bullish for the stock. But the market's never easy, right? This is never going to be kind of, hey, this is just free money. If you take a look at Apple, it kind of rolled over from there one more time. It almost tested its all-time lows or the recent lows from that period of time. And really tested the conviction of anyone who was kind of bullish on Apple at that time before it went on this incredible journey. I mean, once things settled down, I mean, pre that announcement, that was actually the low point. Apple never went lower than that, but it kind of got close. And after that retest, Apple took off and never looked back. So taking a look at Shopify, interestingly, if you look at the Shopify chart, they also had that gap up on the news announcement. And now we've had kind of this pullback lower in Shopify. So thinking of Shopify, where are we here? How would someone play this? So I'm looking at this. I've had kind of an interesting battle with Shopify in 2023 personally with my own investing. I came into the year with Shopify as one of my top ideas, taking a look at their business, taking a look at the stock chart. I thought it was potentially going to be a leader at the start of the year, which it was. Unfortunately, earnings in early February caused some downside momentum, so I ended up getting out of there without a whole lot of gain, unfortunately. And just most recently, after this gap up on this news, just a few days ago on the pullback, I started to buy a little bit of stock, but the market kind of rolled over, so I exited for a really small loss. The situation is right now, we don't have a very conducive market environment. So if you take a look at all of the greatest stock runs in history, all of the points, the corrective points on the stock charts where these bases form, they all happen in market correction or in difficult markets. So the company may announce good news, but ultimately, if the market is not in a positive environment, one that's conducive for the stock price to take off, the stock can still languish there for a little bit. And you saw that with Apple in 97, we fell back over. You can see this now with Shopify coming back under pressure. I use some certain tools to kind of give me a good guide on what the current environment is for the market and whether it's accommodative or not. You can see that with the links below the video where I discussed my net highs, net lows tool. And that really is my guide for market environment. And so right now we're in a period of time, if you take a look at the Nasdaq, you can see there's more companies making 52-week lows than 52-week highs. So that's not a very positive environment if there's more stocks kind of breaking down than breaking up. So kind of looking at next steps, I mean, even though Apple put in what was a significant bottom and had launched its massive advance, it did have that major retest. So it's never kind of a simple buy, hold, and walk away. I don't really believe in a buy and hold strategy. But we did have that gap up. We're consolidating. I think now's the time to be aware of the dramatic changes. The market is showing a difficult environment. You can see that, like I discussed with net lows. But like the legendary William O'Neill would say, 90% of bases are formed during market corrections. That's when no one's looking anymore. That's when most investors who are not very focused kind of walk away. That's the amateur move. The amateur move is you kind of walk away during the hard times. You come back after the big uptrend starts, and then all of the best gains are lost. So I think this is a really important time to make that watch list and say who has the potential for these major advances once we come out of this difficult market environment. And that preparation is kind of the difference between the pro and the amateur. So that's why Shopify is on my radar. And you can also see beyond this one news announcement, earnings growth, sales growth have picked up again for Shopify, which is great. So they're back on track. Now they signed a new deal. This new deal is probably going to be viewed very positively by institutional investors, which means more flows into the stock itself beyond just the benefits for the company. So good for the stock and the company, which are really two distinct things. I hope you enjoyed this video. These are just my thoughts on Shopify, a stock I have a close eye on. I just thought the parallels were so interesting that I really want to make a video about this. I love history, so kind of whenever I can see this other scenario that is just so reminiscent of a current one, I love to focus on it. And I think that's the beauty of markets. You have this nice combination of history and finance and and risk management, technical analysis, all coming together to kind of make this journey so much fun. If you like this video, like, subscribe for new videos. We're back into the post-summer season, so we'll be getting some more videos out there with a little more time now that the good weather is gone. We'll be back soon. Thanks so much.